We're standing at the edge of 2026, and the same financial ghosts that haunted our grandparents are back, wearing new masks. The echoes of 1929 aren't fading, they're getting louder. And if you listen closely, history's whispers have become sirens. Most people see a booming market and call it progress. But the smart money sees something else, déjà vu. The same blind euphoria, the same faith that this time we've outsmarted gravity. When we think of the Great Depression, we picture breadlines and broken men on Wall Street steps. But the real story began long before the crash, in a decade of illusion that made it inevitable. The Roaring Twenties weren't just about jazz and champagne, they were about a fever, a belief that everyone could be rich, that the old rules had finally been beaten. Teenagers traded stocks between dance halls, taxi drivers gave investment tips, families borrowed dreams they couldn't afford, convinced the music would never stop. A century later, the apps have changed, the fever hasn't. Newspapers called it a new economy. Politicians promised the end of boom and bust. Sound familiar? The Federal Reserve opened the floodgates and banks sprayed credit like confetti on anyone with a dream and a pulse. Speculation wasn't just tolerated, it was celebrated, and everyone who mattered said it was safe. But there's a rhythm to history, a rhythm every empire dances to before it falls. And every time humanity convinces itself that the rules have changed, those rules return with vengeance. The same signs that glowed red in 1929 are flashing again. Wealth concentrated at the top, speculation without restraint, debt dressed up as innovation, and governments printing confidence to keep the illusion alive. We're not approaching history's repeat. We're already living inside it. The only question is, who will see it before it's too late? A century later, the dance hasn't stopped, but under our feet, the same cracks are beginning to whisper. That 1920s fever never really broke. It just went into remission. And now, a century later, the patient is sicker than ever. The apps have changed, but the addiction hasn't. We swap ticker tape for TikTok, margin accounts for meme stocks, and the blind faith in radios for a blind faith in algorithms. The outcome, however, is pre-written, because when you borrow the future to pay for the present, the bill always comes due. And today, that bill is being printed in trillions. So where does our modern illusion live? It's in the venture capital darling that burned $1 billion to sell you a subscription for nothing. It's in the cryptocurrency that soared on a meme and collapsed on a tweet. It's in the student who takes a loan for a degree that won't pay it back, and the government that spends money it hasn't even imagined earning. We've simply found new words for an old disease. We don't call it speculation anymore, we call it disruption. We don't call it debt, we call it liquidity. But a bubble by any other name still pops just as loud. But inequality doesn't lie. Back then, the top 1% owned a quarter of the nation's wealth. Today, they own a third, and climbing. The middle class, once the backbone of every empire, is cracking under debt and delusion. The rich can buy super yachts and islands, but they can't buy stability, because an economy built on speculation instead of substance always ends the same way, with disbelief. The parallels aren't coincidence. They're prophecy written in numbers and denial. We're dancing to the same rhythm, only the instruments have changed. That moment, when confidence turns to silence, is closer than anyone dares to admit. By 1929, even barbers and teachers were buying stocks on credit, betting borrowed money on borrowed dreams. It worked beautifully until it didn't. Debt became the invisible scaffolding of prosperity, fragile, glittering, and hollow. Everyone leaned on it. Banks, corporations, families, governments. A century later, the illusion is digital. Credit cards, student loans, corporate bonds, and deficits, all built on the same faith that tomorrow will always pay for today. Only now it's not leverage, it's dependency. Corporate debt has exploded. Households are drowning in record loans. Governments are spending money they haven't even imagined earning. The system survives only because no one dares ask the dangerous question, what if the growth stops? Central bankers talk of soft landings. Politicians promise that more spending will fix what spending broke. Tech billionaires assure us that innovation will outrun reality. But the truth is far older and far simpler. Every empire collapses when its debts grow faster than its faith. And that's what this is really about, faith. Faith that banks will stay solvent, faith that governments will pay their bills, faith that the digital numbers in our accounts actually mean something. When that faith breaks, collapse doesn't begin with numbers. It begins with disbelief. In 1929, disbelief spread like wildfire. Margin calls triggered panic. Banks that seemed immortal fell overnight. And as confidence evaporated, so did the illusion of wealth itself. The tragedy isn't that it happened once, it's that we built a taller tower on the same cracked foundation. This time, the debts are global, the trades are instant, and when the fall comes, it won't crawl, it will crash at the speed of data. The cracks are already visible, you just have to look past the headlines. And every financial empire, no matter how digital or advanced, still falls the same way. First slowly, then all at once. In 1929, when the markets began to tremble, the experts said it was temporary. Just a correction, they called it. The press reassured the public that everything was under control. Politicians smiled for cameras and promised stability, and for a moment people believed them, because belief was all they had left. That same illusion of control defines our world today. We've traded ticker tape for touchscreens, brokers for algorithms, and optimism for denial. But the script hasn't changed. Only the actors have. We've traded ticker tape for touchscreens, brokers for algorithms, and optimism for denial. But the script hasn't changed. Only the actors have. The magicians on stage are still pulling the same rabbit out of the same empty hat. They just have new names for the trick. It's a kind of magic trick, one that only works as long as no one asks where the rabbit came from. The problem is the cracks are widening, but you won't see them on the front page. You'll see them in the half-empty office towers that were once monuments to growth. You'll feel them when a regional bank stuffed with safe assets quietly vanishes over a weekend. The system is now a hall of mirrors, and the first crack will come from where no one is looking. It's the same silent unraveling that happened a century ago, but this time it's global. When one bank sneezes in New York, markets tremble in Tokyo. When a hedge fund collapses in London, currencies wobble in Africa. The system is now so interconnected that a spark anywhere can ignite a fire everywhere. And unlike 1929, the panic won't spread over weeks. It'll spread in seconds. Algorithms don't sleep. They don't hesitate. Once the sell signals trigger, the cascade will move faster than human emotion ever could. But here's what makes it truly dangerous. Trust is already gone. People don't believe the media. They don't believe their leaders. And they certainly don't believe that the financial system is built to protect them. When the next crash comes, it won't just be numbers that collapse, it'll be legitimacy. Because when faith dies, institutions follow. The rich are preparing quietly. Farmland, gold, bunkers, private jets. They understand what's coming. They've seen this story before. Every empire falls the same way. First the money loses value, then the words lose meaning, and finally the people lose trust. And once trust is gone, the collapse is no longer financial, it's civilizational.